Hey, everyone, and welcome back to the show. I'm Blake Oliver.
I'm David Leary.
And we are joined today by Adam Zaki from CFO.com. Adam, welcome to the show.
Guys, thank you so much for having me. I've become such a big fan, so forgive me, I might be a little bit of a fanboy during this episode.
Well, I'm a big fan of CFO.com. I've
Thank you.
been reading for years. You're on my Feedly. We cover stories from CFO on the show, including yours, Adam. So great to have you on talking about the trends that you are seeing in the world of finance, the CFO world, the side that we are not quite as familiar with here on the accounting podcast, but is really important because most accountants do not work in public accounting. They work in corporate finance and accounting departments. So I'm really curious, Adam, what are the trends that you are seeing, big picture trends in 2024? What have you been covering? Like, what is on the minds of CFOs?
I mean, first thing that comes to mind is AI, right? When I first started covering AI about a year ago, it was much more of a, oh my goodness, this is going to completely affect my job. How does this even work? How do I not fall behind when I compare myself to everybody else when it comes to AI? But most recently, it's been interesting. I think that there's been a hype that's kind of been deflating around AI in the CFO community. And it's become much more of a realistic sense of, you know what, it's not as much of a boogeyman anymore as it now. It's like, all right, how do we actually put this to work? And the questions have become much more focused on, and just going back, I was just at the CFO Leadership Council's event in Boston and spoke a lot about AI, of course, but the focus this time around was not like, how is this going to blow up my job and really affect me? The questions were much more focused on things like, how do I become a better prompter? What are the cybersecurity implications of this type of stuff? So CFOs are learning and the realism around AI is setting in. So that's definitely a trend I've been noticing is that, like I said, AI is much less of a boogeyman than it was a year ago.
Still, though, there's a lot of corporations that aren't letting their employees use AI.
Yeah.
My wife works for a Fortune 50 company and cannot use AI in her job. I hear this from a lot of accountants working in corporate finance. Do you have an idea of like how many teams are actually using AI in their work to do financial analysis, financial statements, that sort of thing?
Well, the Duke Fed survey just came out yesterday. I wrote it up and it's interesting. I think that depends on how big of a company it is. The larger the company, according to the data out there, the more likely they are to train their employees on AI, implement AI. But smaller companies are much less likely to do this. And I think it just comes down to cost. I think these tools are very expensive. Blake, I know you've been on the road, you've gone to these trade shows. Every company is .ai now. Just to even differentiate what these products do and all these different companies has become a challenge in and of itself. And so I think if you're a CFO or working for a larger company, those resources might be more available to you.
Yeah.
Because as CFO, you might have the time to go out and explore those things. But if you work for a smaller company, you're in the weeds of the finance and accounting. You don't have the time to go attend a trade show and talk to 13 different booths. You want technology that's going to fix your problem tomorrow. And I don't know if AI brings that to the table yet.
Yeah, that's the challenging part is that we have these tools, but we really don't know how to use them yet. I've just been learning by doing and following a few people online and just playing around with it, right? But there's no courses you can take on how to do this in accounting. I don't know of any professors that are teaching courses on how to use ChatGPT to do accounting work. But yet, 75% of employees are using AI at work. That was a story in CFO. Was that one you reported? I think it was. Yeah.
Story, yeah.
Yeah. So it's like we have this situation where people are using AI, but maybe not officially. Which
It's funny. I covered a work trend. Well, I wrote up a bunch of work trends. One of the new trends that have popped up is this term called BYOAI, bring your own AI to work, right?
Right.
And I think that's where that 75% is. It's people just going on ChatGPT and saying, hey, copy edit this email. I think a majority of people are doing that. But I don't know how many people are actually using it in the weeds of finance and accounting.
Yeah.
And I think that's where the question is. Are we using it to copy edit things? Yes, of course. We're using it to ask it. Even for me, like when I have to look up a complicated finance term that I've never come across, we spoke about this before. I'm not a CPA. I went to journalism school. So a lot of these terms that I come across in this job, I have no idea what they are. And ChatGPT has been a great tool for me to have conversations with it and learn about finance and accounting. It's been a great tool for me to do that. But and I think that comes across in a lot of different industries. But for finance and accounting and the weeds of it, I just don't know if it's there yet. I think the hype is starting to come down, and I'm interested to see how this unfolds over the next year or so and the real ways that it can be used.
And I think the way these surveys count AI use is just there's a lot of variable in that. And because I think I saw a week ago or 2 weeks ago, Intuit in the UK for QuickBooks, they had a survey, and I think it was like 97 or 99% of all accountants and bookkeepers use AI, because I think there's AI in bank feeds, right? There's AI in like receipt scanning and bill scanning, and I think there's this big umbrella. AI doesn't have to be one of the GPT type tools. So these surveys are really all over the board in the accounting industry, which is probably why you can't make heads or tails of it either. Like what's the reality?
Mm-hmm. Yeah, in your story here, the one that had the 75% usage stat, it says also that only 41% of leaders plan to redesign business processes with AI, and just 25% of companies are planning to offer AI training this year. So the definition of what constitutes AI use is what we got to think about, right? Like you said, everyone's using it, but what are they using it for is my big question.
And, a lot of the focus too, and I've covered data that says that a lot of the training is stuck at the top. CFOs are getting the AI training on how to use this stuff, which should not really be the case.
Right.
The people working in actually doing the finance and accounting, especially these larger companies, should be getting this training. But according to the data we've seen, that's not really the case. That these upskilling, the term upskilling is so popular nowadays, that's being focused at the top of management.
And that's the wrong way to do it, because we've seen many studies in different professions that show that the people who benefit the most from AI are the least skilled employees. AI chatbots upskill people and help them create outputs that are closer to average or above average. So if you are say a below average writer and you use AI to improve your writing, a tool like just a chatbot, Claude or Grammarly, your emails are going to get way better. But if you're already a CFO who knows how to write those emails, it's not going to help you much. It might even make it worse. So we're going about it backwards. We should really be giving these tools to the staff, to the junior staff especially.
Could that just be like where the market is? Because ultimately the CFO is going to eventually make a buy decision on some tools. And we've met people at Reddit. We've met some of those accountants team, and they're like engineers. Their job is to build tools for the accounting team at a bigger company. And I think we met he was on a podcast. He was an accountant who managed a team of engineers at Amazon to build better tools for the accountants at the internal team at Amazon. So these bigger companies, maybe that's where this is falling in at. It's the CFO who's in his or her engineering teams really working with this stuff. And like Blake said, the end users, the front end employees that are actually doing the work, just aren't getting the benefit yet or utilizing it yet.
And I think there's that, and I think there's also a bit of a sense of paranoia. No CFO wants to be left behind when you hear about this like life-changing technology coming in. Nobody wants to be left out of the loop. So if there's resources available, the CFO wants as much as they can get just for their own careers, let alone for the company. And so I think some of that plays into it.
It's greedy.
It's AI FOMO, right? It's
Exactly
it's like we had
right.
crypto FOMO. Now we have AI FOMO. Well, let's talk about what we can actually use AI for, not maybe specific applications, but like the problems it could solve. And that big problem that I hear about is the talent shortage. We talk about it all the time on our show. It's one of our most popular topics, and we know that it's affecting finance teams and CFOs as well. What is the state of the talent shortage in corporate finance, Adam?
I think it's gotten a little bit better over the past year with these types of tools coming into play. Like we said, at these larger companies who are starting to use them. But I think overall, we spoke about it a little bit before we hit record, was that, there's a poor perception of the final stage of a career in finance and accounting, right? When I was in college, my perception of accounting was, oh, you're just going to go slog your life away at Deloitte or PwC and, go work 100 hours a week. But that's not necessarily the case. And I've learned that working at CFO, that you can become a CFO in an industry or at a company that you like. You could be like you guys, who are thought leaders and create a company doing that and providing CPE credits in this space. Those are just two examples of a wide variety of careers that are available for people that pursue finance and accounting. And I think that message has been poorly relayed. And I don't know who that falls on, whose responsibility that is. I'm not sure. But, when I spoke to Erica Williams, the chair of the PCAOB, she made a great point when she said that I think the biggest problem with this is that these companies just don't want to pay. I think we need to pay accountants more. It's as simple as that. If you pay more, smarter people will go in and pursue those careers. But right now, an extra year of college to go and make maybe $100,000 a year to start out, go sell cars. You can go put in 150 hours learning how to sell cars and go make $100,000 a year. And it's really just up to that, I believe. It comes down to compensation. CFO compensation is very high. Accountant compensation is very low.
You mentioned the 150-hour rule, the 5th year of education required to become a CPA. What do CFOs think about 150?
I've gotten mixed answers on this. We run a series called a peer audit. And what I do is I go out there and I survey like 7 CFOs and I ask them the same question. And we ran a peer audit that covered this. And I think that they're hesitant to hire an accountant that doesn't have the 150-hour requirement, right? I think there's definitely a mindset where I don't want to be the first to go out there and bring on members of my team that don't have these requirements. But I think there also is a consensus that it doesn't really do much, right? The VP of Finance for the Savannah Bananas which by the way, if you haven't heard of the Savannah Bananas.
Best Instagram reels on Instagram, TikTok.
And if you can get the
Baseball.
VP of Finance on here, he's a great guy. He actually teaches finance and accounting at the Savannah College of Art and Design.
Oh, somebody has to make this introduction for us. We gotta
after this, I will intro you
sure.
because he really is a great guy. But he made a great point where I think the whole process is kind of dismantled and it needs to be rebuilt. And we spoke a lot about that. But my concern is that if we take away the 150-hour requirement, what do we say to the people that are doing it now or just met it? I think there needs to be some type of cooling off period if this change is to be made. But the details of that, I don't know how to put that together. I don't know how that'd be possible. But if you took away the 150-hour requirement tomorrow, and I think a lot of CFOs would agree with this, it would piss off a lot of people because there are people that just satisfied this requirement. And there are so many people that worked so hard to satisfy the requirement that if you just took it away, it would upset people. It would.
I suspect they're already upset because most of the people they work with who are CPAs didn't have to do it to begin with. So they're probably already upset.
Well, we're talking about the talent shortage, and part of the problem is the Gen Z. The Gen Z generation that doesn't want to work the long hours. How is Gen Z fitting into the profession in industry, Adam? When you talk to CFOs, like what works, what doesn't?
Well, they get a bad rep. We all know that, right? Gen Z's killed in the media. And I try, I speak to a lot of Gen Z consultants. There's a few of them, these Gen Z consulting firms, and they're great sources to me, and I speak to them frequently. And I think like any other generation, Gen Z has very, very intelligent, potentially successful people within it. There are a lot of young, smart people out there. However, those young, smart people are pursuing entrepreneurship. They want to start businesses. They want to be social media influencers. There are people that would have pursued finance and accounting years ago that are not, because they see other opportunities that are available to them. How are they blending in? Like I said, there are plenty of young people that are working in finance and accounting right now that are doing a great job. But a great source of mine is a recruiter for tax at one of the big 4 firms. Never comes on the record. We grew up together, but we talk all the time about his job, right? And he always tells me these jobs are yours to have. Once you get the internship, you have to screw it up not to get the job, right? To work for one of these big 4 firms. And I think there's a lot to be said about that. When Gen Z goes out and pursues these careers, accounting and finance is one of the only few areas where you can kind of guarantee yourself a job. And I think the smart people, the B+, A- students realize that. and they go to accounting. But it's the A+ students that pursue consulting, medicine, those things. So the smartest of the smart of Gen Z, I don't believe, are pursuing finance and accounting. But the mid-range are.
You write about the foosball table fallacy. Tell us about the foosball table fallacy.
Well, there's a great term out there as well that I didn't come up with called office peacocking, right? And to be an office peacock is to have your high school diploma at your desk with 10 pictures of your kids and a picture of your dog and a stuffed animal, and to kind of play up the office, right? And I think the foosball table fallacy plays into that, where Gen Z does not want to go into an office because there's a pool table there. And they don't want to go into an office because they have an espresso machine. You know, I think those things sound good in a boardroom. And when there's a bunch of people sitting around a table going, hey, how do we make people want to come into the office? Those ideas sound good in theory, but Gen Z has a great sense of BS. And I find that a lot in the people that I interview, right? That they have a keen for authenticity. And I think if you want people to come to the office, you need to create an authentic environment, whether that means it's easy to get to, there's quiet workspaces, it's comfortable, it's not on a 5-day-a-week cadence, there's some autonomy in there. But just to throw a foosball table in there, like we call it CFO, the foosball table fallacy, it doesn't work. And I think, you know, as I'm a millennial, I'll be 30 in August. And even for me, like I know some people my age that maybe years ago before COVID would have liked to play a little foosball in the office, right? But Gen Z doesn't buy that. And if you want young people to come into the office, that's not the way to do it.
So I think David was going to ask the question, what does work?
Well, I was going to ask that, like, what, you know, there's a lot of arguments in office, remote, hybrid. Like, when you talk to CFOs, what are their opinions for their teams, their finance teams? Forget their entire company, but where do CFOs want their finance teams? How do they want to work?
Well, many CFOs that I talk to have been at their companies and in the post-COVID world, right? Few CFOs stay in their roles 3-4 years or longer than that. And so a lot of CFOs now are at companies where, you know, they've only been there post-COVID in this remote working environment. So it's very difficult to come in and make a change. You know, if you step into a company and they're on a 3-day-a-week or some type of hybrid schedule, or they're fully remote, to make that change is like culture suicide. And many CFOs do not want to do that. They don't want to, you know, be the bad guy. And I think CEOs would agree. The entire executive team does not want to, you know, be marginalized for saying, hey, we have to come into the office. But I think what works is that if you want to put some type of change in, the executives need to be there. If the CFO says you need to be in the office 3 days a week, the CFO should be there too. And everybody should be working together. I find that some CFOs, when they want to change their work environments, they want to do it drastically, right? Like starting on this day, we're going to make this change. And I think there needs to be autonomy in that decision. I think you can encourage people to go in at their own pace. And once there's a pattern of people going into the office, then you could say, hey, we're already all here once a week. Why don't we make it twice a week? And if it's gradual, I think that will work. Just to make a change overnight, people don't want to do that. You guys work for yourselves. You guys don't have a boss, but you did. Imagine your boss made a change that would change the way that your entire job works overnight. That would really stink. And I think a lot of people resonate with that and say, I don't want to deal with that.
Well, this is all related to the talent shortage, because if you do that change suddenly, you will find a lot of people might leave. And that might be deliberate, right? We've seen companies do this, and maybe it's really a strategy just to create some attrition. So you don't have to lay people off. They leave if they don't want to come into the office. You write about the breakdown of financial controls due to the talent shortage. And that's some of the most fascinating writing I read on CFO, because it's a real impact. We are seeing companies be unable to issue their financial statements on time. And these are public companies, and that's a big no-no. Can you give some examples for our listeners of the real world consequences of not having enough accountants in the profession?
I mean, I would Google the word Detroit CFO right now.
Detroit CFO.
The Detroit Riverfront Conservancy CFO was just, I believe, the FBI is investigating him. I'm not sure. I wasn't the one who covered the story fully. My coworker Andy Burt did, but the guy stole $40 million over the course of a decade. And just that is such an example of what failure financial controls can do over time. It's not just one instance. A failure over time can be detrimental and can really go unnoticed when a CFO kind of calls the shots. Like, for example, this Detroit guy used the same auditor for 10 years. You're supposed to change every 3 or 4 years, from my understanding. That's like ethically the best practice, but this guy did not. And it's little things like that. Those are little failures of financial controls that add up to big failures, right? I just met with the CFO of Quincy, Massachusetts, the city of Quincy. Great guy, 31 years old. He's an economist. Didn't even take an accounting course after a second year of college, right? Not an accountant by any means. Got the job during COVID. Has been there for 4 years. Another guest that would be fascinating for the show for you guys. But he's in the midst of an FBI investigation right now. And I don't know too many details about it. He didn't really want to go too much into it, but it has to do with his retirement funding for the city or something like that. But what we did talk about is the cybersecurity and how it's not about setting the trap to catch the fraud, right? It's about setting the processes in place to prevent that from ever happening and being proactive in cybersecurity, just to buy a good cybersecurity tool or just to pay somebody to audit and see if there's any crime. That's like a last ditch effort. Like, it's about being proactive when it comes to this stuff. And that's really the case here. And if there's a lack of talent, then those looking for the crime and those doing the crime makes it harder for those looking for it and easier for those doing it. Because, the detectives are not as good at their job. And it's easier to get away with the crime. And so I think failure of financial controls when it comes to talent is huge. If the talent level's down, it's easier to get away with stuff.
And the failure of not having controls is not even just about fraud. I mean, I'm going to send them all to you when I see these stories come through, Adam, and let you compile it together. Over and over again, it's a school district here, it's a city here. Yeah. I just think in Sydney, Australia, their subway system or something, $1 billion, they overstayed the revenue. There's just controls where transactions aren't getting recorded properly. And the next thing you know, they have budget problems they have to cut. School district lays off half their teachers because they've been double booking the revenue for 2 years because the financial controls aren't there and nobody's looking at it. And it all probably ties back to those not enough bodies, right?
Yeah, I think so. And I don't know if there's necessarily a technology tool to fix this, right? I mean,
well, that's the promise of AI, right? Is hopefully we can address some of this talent shortage with using AI tools to put in proper internal controls in organizations that don't have people to do it. But we're really early with all of these chatbots, and it's going to take a while for these AI agents to develop that can actually do that, like reconcile a clearing account. I mean, David and I were just talking in our last episode about this whole Synapse bankruptcy and how that has caused havoc in the fintech world, here in the States, because essentially they weren't reconciling a clearing account and it got out of control and nobody could get their arms around it. And eventually it led to a discrepancy of how many millions of dollars, David? Billion?
85 million is just gone. And apparently I learned today that they were commingling funds as well. It's just like simple accounting 101 they couldn't execute on.
It gets out of control, like you said, Adam, right? Like it spirals over years, and it's a problem that nobody's aware of until it becomes a problem everybody's aware of. So that's my fear, is that, do we have another Enron lurking in the economy? And it's because we don't have internal controls and we don't have enough auditors who are watching this. That is my big fear. And maybe I'm just extra cognizant of that, having like grown up in the post Enron world. Like I was very aware of that when it happened. But just because it hasn't happened for 20 years doesn't mean it couldn't happen again, right?
I agree with you. And I don't think it's a question of resources, right? Before we talked about smaller companies versus larger companies having the resources to use AI. I mean, even when you turn to sports, right? Failure of financial controls when it comes to Shohei Ohtani. I mean, with the whole gambling thing, I mean, how do you not keep track of the amount of money that was going out of his accounts for gambling? How is there not somebody? I mean, I think there was.
Where was the business manager is the question I asked. Like these guys all have business managers.
Where was
the accountant?
there's a very interesting part of that story that did not get publicized. Only us at CFO covered it. I wrote the story where the day that came out, ESPN had interviewed Otani's interpreter on camera about the event for a 45-minute interview and never released it. The interview's not out there, but they wrote that they put this together. It's actually linked in the story that I covered about Otani. So his take is out there. Things changed very quickly after all that happened. And I don't know how much of, we can, talk about the back doors of baseball and what goes on behind the scenes, right? But I think some of that has to be said when it comes to this. I don't know if that situation was a classic case of failure of financial controls, but I do think that there's an element of that. Just, that's the biggest star in sports, and nobody was tracking his money. How does that happen?
What's interesting about that, he had all these financial advisors because he negotiated a very interesting, never done before baseball contract that deferring
the revenue.
Right?
Yeah.
But then the day-to-day finances, apparently he didn't get any help on that or supervision. It's really hard to reconcile that in my brain.
Yeah.
And that's what makes finance and accounting so interesting, right?
Yeah.
I think those are the things that we need to showcase to young people. It's like, hey, you can go into forensic accounting and look into Shohei Ohtani's finances. That's a cool gig, but I don't think people know that that's the case. I really don't.
No, when I talk to students, they say their professors really only promote generally, and this is not all professors or accounting lecturers, but they promote the traditional path. Go work for a big firm in audit or tax, which to me is not appealing in the slightest, right? And I think most people are finding that less and less appealing, especially when the hours are so awful. So we got to make people more aware of paths into industry. I saw a story recently, I don't know if this was a CFO story, about how AT&T is starting to bypass Big Four for recruitment and going direct to colleges and recruiting directly out of school to fill their ranks because it's not working for them the other way. So maybe we'll see more accountants go straight from school into corporate finance.
I'd love to ask you guys, when you were young, early on in your careers, was CFO a goal? Like, was it ever to you guys to be like, I'd love to be a CFO one day? Or was it to make partner at a Big Four firm? What came to mind first?
Well, I'm a non-traditional accountant. I was a musician. So CFO was not on my list of, I think the first thing I wanted to be was an astronaut. But if I sort of put myself back into that, like, let's say if I imagine I'm an accounting student, to me, CFO is the most glamorous role you can have. Running finance for a fast-growing company or something, even just a big company, like that is a really cool role. What about you, David?
I think, when I was in college, if it was, I was going to major in accounting, it was Big Seven, I think, at the time. But like the concept, if I remember, like going back to being that age, this concept of, you didn't even know what an accounting partner was at a firm. Like that didn't even exist in your brain, but you knew what a CFO was, right? But it's kind of interesting that somehow you're aware of CFOs, but everybody gets pushed. But I know why. They'd have these mixers, and the Big Seven was at all these mixers, for the accounting club and all that. But industry wasn't there, right? So,
Adam, I don't know if that answers your question, but we also want to give you the opportunity to ask your questions of us. We're going to turn the tables.
Well, I love this.
And so go ahead. You are now the interviewer.
okay.
What questions do you have for us?
Well, thank you. First of all, a question that we polled to our readers that we're waiting. So we were off for Wednesday for Juneteenth. So we publish survey results in our newsletters once a week, every Wednesday. So these survey results will be out this upcoming Wednesday. Would either one of you trade your current role for the CFO gig at Google or OpenAI? Because these are two of the most difficult jobs available to CFOs out there right now. Two companies growing in dramatically different ways with lots of politics going on inside of both of them. It's a big challenge, but also a big paycheck. So what do you guys think?
I'll let David go first.
I will say no right now after doing 22 years at a big, huge corporation. I like the way what we've built and what we're doing now at Earmark. I'm going to say no. I will not.
You like the startup, the small startups.
Yeah.
It is fun. David and I have a lot of fun. We've been doing Earmark it's been going on 3 years now, really, since the very beginning. And David joined me officially last year. My answer is no, but not because I wouldn't find it fascinating, assuming that I had the capability to do this job, right? But I know that it would just take all of my time. And for me, the thing I love about accounting the most is the opportunity to have a very, very flexible lifestyle. So I can live very comfortably here in Arizona, a relatively low cost state. And I can work when I want and how much I want, and I can afford to live. And maybe that's just coming from California, where I felt like I had to hustle just to get by. But I really, really like at this point in my life, having a kid, being able to say, I'm just going to work in the mornings and be able to have that lifestyle kind of job.
We talk a lot about work-life balance. I think that's what you're getting at, right?
Yeah.
And you're right.
And that's the thing that accounting roles can offer, is that if we could just get our minds around that in the profession, that you don't have to work 12-hour days to be successful, or that it's possible to create flexible roles for people. I meet so many accountants, EAs, CPAs, just accountants, bookkeepers who are moms who got pushed out of public accounting or industry because they needed flexibility and they couldn't get it. And it wouldn't have taken that much for these teams to keep them on the team, for their managers to say, okay, it's okay if you leave at 3, just get your job done. You don't have to bill all these hours. We can figure out another way to do it. And a lot of times, if you want to stick around, the only option is you take a massive pay cut and you still have to do the same amount of work, which seems completely unfair. So, I really sympathize with that.
How about, we spoke about the 150-hour rule, and if we took away the requirements, what would happen to the people working on it? But is there let's say that was off the table. We have to keep the 150-hour rule.
Yeah.
What's the other answer? Is there something else? Because lately I feel like this 150-hour requirement change is the only solution that people are coming up with to fix this problem. What other solutions do you think are out there if this was not to be changed?
Well, first, I want to say that according to my research, which I haven't done a ton of it, but I've talked to some people who are very knowledgeable about the laws in a variety of states, Minnesota, South Carolina, here in Arizona. I don't think that 150 affects CPAs working in industry at all. Their job function would not change. Mobility, this whole mobility issue, would actually not matter, because CPAs in industry are, as far as I can tell, there's no state that actually regulates them. It's all people in public accounting. So we don't have to actually worry about this mobility problem in industry, and that's a fallacy. And anyone who's saying that, and I know there are people at the AICPA who claim that there would be problems. I cannot find a single.
It was printed. I remember it was printed.
Yeah, actually, an AICPA executive wrote an opinion piece in CFO Dive and claimed that this would affect CFOs and their teams. And I cannot find an example of it. And I asked the AICPA for examples, and they could not provide them. I don't think it exists. So that's one thing I think we need to get straight. 150 and changes to it and mobility issues, they don't affect CPAs working in industry. Maybe your LinkedIn profile, a state could come after you and say you can't use CPA on your LinkedIn profile or something because you're living here and you're not licensed here, whatever. Big deal. You can still do your job. In terms of so your question was about what do we do about it? What's the solution?
If the 150-hour rule's exactly where it is now,
Yeah.
what's the next step? What do we do?
Well, so to me, I think that it would actually be fairly simple if the national leadership got on board to create an alternative pathway. So you don't get rid of 150. You just say, look, if you don't want to do 150 hours, you can do 120, and you can get 2 years of work experience. And that's what Minnesota is working to do. That's what some other states are trying to do. And we can overcome the mobility issues. My argument about this mobility thing is that because of remote work, firms can just hire people with the right licenses in the right states if they need them. It's not the issue that it used to be, right? 20, 30, 40 years ago, it was a huge hassle because you had to have everybody working, say, here in Phoenix in your Phoenix firm. And if you wanted to do New Mexico audits, like you had to have that mobility, right? The ability to use your Arizona license in New Mexico. But now you could just go hire some people in Albuquerque and let them work remotely. So I think it's like a non-issue. I think the solution is to immediately get rid of it. And when you look at surveys of CPAs, right, you ask them what they think, 80% are in favor of making a change at the state level. We've got the supermajority on board. It's the people that are not on board are the leaders, often who have been around for such a long time. They were the people who put that rule in place. And I think that's the problem, is they can't admit they made a mistake. Or perhaps that the solution that they created was for a problem that doesn't exist anymore and has now created problems of its own.
David, any thoughts?
I mean, I think if they don't change it, you're not going to see change. Like ultimately, right?
That's a quote.
Like it's just going to be the same. Everything's going to stay the same.
You know what? The profession needs a CFO putting together a dashboard with all the metrics. And if we did that, they'd all be pointing down, right? The number of CPAs licensed every year is going down. The number of CPAs who are CFOs is going down. The number of accounting students is going down. The people who say they want to be accounting students is going down. The only thing that's going up is the number of people leaving the public accounting, which is not where we want it to go, right? So everything is going in the wrong direction. We got to do something, is my view. And this is a very simple thing, and it has broad support. So we're seeing progress being made, but it is just so slow. These state boards of accountancy.
Do you think it's fair? Do you think entry-level CPAs need a raise?
On compensation?
Yes.
Well, so I think the firms get unfairly blamed for this because we say, like the firms should just pay more. But the problem is that a single firm can't make this change on its own without directly impacting partner compensation. And that puts them at a disadvantage versus other firms. So all the firms have to either get together and do it together, or we need to increase the value of these young graduates. So I would put the blame at the foot of the educational institutions. If you think about it, right, the starting pay of an accountant is indicative of their value when they come out of school. And if the pay is low, that indicates low value. And I think a lot of schools have failed to prepare accountants for the world of work. They don't know anything. I'm being a bit facetious, but you ask like a small firm partner, like, can a young accountant coming out of accounting school with an accounting degree do anything in your firm? And the answer is pretty much no. I got to train them how to do everything because the education is so theoretical. There's very little practical education. I was lucky because I was working while I was in school, so I was able to apply the theory I learned in the real world. I don't know how these students who don't have that experience working are learning anything. Accounting is a profession that is based on practical expertise, and the education is all in the classroom for a lot of these kids. And I think that's why the starting salaries are low. If colleges actually taught students how to do a tax return in school, like the software to use, how to actually like push one through, get one done, they'd be a lot more valuable to a small firm when they graduate. And same thing for creating financial statements. A lot of these students graduated, they have never put together a set of financial statements, except in theory. So I think that it's traditional education that is the problem, and the accounting curriculum has not really changed much in decades.
But I think CFOs have to have, accounting firms, yes, need to pay accounting graduates more money. But that means somebody has to value the work they're doing, which is essentially the audits. And CFOs work for these big companies in the boards, and the CFOs probably have some input on these contracts that get awarded. And what do they always do? You choose the lowest bidder. And so CFO chooses the lowest bidder. The lowest bidder pays the employees not a lot. Those employees quit accounting entirely. Now the CFO doesn't have any staff to hire. And so you have this cycle happening where ultimately the CFOs are contributing to the problem too.
The
Because they're not
commoditization.
paying for the audits.
The commoditization of audit
Yeah.
has devalued audit, which lowers audit salaries. That's what you're saying, David.
Yeah.
Totally agree.
And then when people leave accounting entirely, now CFOs can't hire people on their internal teams because these people have left accounting. They're not leaving public accounting to go into industry. They're leaving the field entirely. And that's the bigger issue.
That's
when
true.
I stepped into this space, I learned a lot, right? But one of the most shocking things that I learned was that public companies can choose their own auditors. And I know that you guys have spoken about this a lot on your show, but from an outsider coming in, that was the most mind-blowing thing to me. And Blake, I think the way you put it, it's like a restaurant coming in and
Health
choosing their own
inspector.
health inspector.
Yes.
That's exactly it. And I think there's a lot of that to be said in how this all works. And when you step in as an outsider, some of the ways that these things work in finance and accounting, you go, wait, what? And I think now with technology, I think a lot of this can be remedied.
Well, choosing your own auditor would work if we actually had proper enforcement of auditing standards. But the problem is that it's very easy, as we saw in the case of BF Borgers, to do really, really bad audits for years and years and years and suffer no consequences. And I just saw a story about how most of BF Borgers' clients, this is the audit firm that was doing sham audits. The SEC came out with a case against BF Borgers and basically said you can't do public audits anymore because you're faking them. They accuse them of completely faking work papers. Like, this is a total sham audit firm. They were doing audits for like 120 public companies for years and years, including Trump's SPAC, Truth Social. So now all of these companies have to go get new auditors. 70 still can't get them. And one of the reasons is that BF Borgers was lowballing on audit fees, 2 to 3 times less than what other firms are quoting. So when you have lax enforcement of audit standards and firms like this are allowed to exist, and I am willing to bet money that there are more of them, it drives fees down, right? Because the honest auditors, the good auditors, can't compete with these lowball fake audits. And that lowers salaries in the profession. So we got to do something. If firms get to pick their own auditors, we got to have some independent third party that's making sure that these audits are actually well done, which is very challenging. Or maybe we switch up the model and we incentivize the auditors to be more like investigators. And those people cannot be hired by the clients. They've got to be hired by some other agency and given autonomy. So they don't have this financial incentive to do low quality work and to not really look into the problems.
I think that's just a little difficult, only because a lot of CFOs that I talk to, when we talk about career, a lot of them, especially who came from Big Four, said, "Oh, I had this company as a client, and they hired me after I was done working with them." And so there's an incentive. If you get a client that you like, in your brain, in the back of your mind, you can go, "This person might hire me."
When I talk to young auditors and they want to get out of audit, I say that's how you do it. All the auditors I know who ended up in good industry positions got a job at the client. Right.
And if you throw the client under the bus, you're probably not going to get. You've just eliminated a job opportunity.
Right.
And from an outsider looking in, as a journalist, like I said, who's not a CPA and who learned this industry, from a media perspective, that's funny to me. And I've always thought that's a little funny. But like I said, there's a lot of things within finance and accounting where it's just a little quirky. And hopefully AI is the remedy to that. Hopefully.
It could be. The other remedy is that the business model somehow comes crashing down with another Enron, right? Because that sort of thing is what actually gets changed to happen, right? Like the accounting profession as it currently exists, it's only been since like the Great Depression, which is really not that long, right? We're talking like 100 years. So hopefully that's not what it takes. But I could see that being what it takes, and maybe it takes decades for that eventually to happen, because there's just so much about the business model that's entrenched, like you said, the way that people get jobs. Nobody wants to shake that up. The way that auditors get paid, no audit partner wants to shake that up and risk their compensation, their income. They work so hard to get there. And there's a lot of really honest people. So it's not their fault that the system is set up in a way that incentivizes bad actors. And fortunately, there's enough bad actors to cause some serious problems. So it's a really, really challenging problem. And I do sympathize with the leaders at the PCAOB, at the AICPA, at NASBA, who have to deal with it because it's not an easy solution. But I also feel like a lot of them are just business as usual. Let's keep it going as long as possible. And they're part of the problem because of that. So, but I, as an outsider, I get to sit here and opine in my armchair. I don't have to deal with it. So,
Can I ask you guys one final question here?
Yeah.
Well, what is how does, let me backpedal here a little bit. Yeah, a lot of CFOs have trouble being approachable, especially when they step into a new role at a bigger company, right? If you go from overseeing a company of 250 people to a company of 1,200, it's very hard to introduce yourself to everybody. So as young accountants coming up in your careers, when you interacted with CFOs or even any type of leadership, what do you remember from the good ones, the nice ones, the ones that made an impact on you? Because a lot of CFOs want to be that person. They want to be the leader in the room that their team remembers after they leave the company, but they don't know how. And when I go to these events, that's a topic of conversation for the keynotes even too. It's like, how do I become more approachable among my team? How do I not just be, the scary CFO in the corner with the big glass office without being, while still being a CFO, How do I balance that? How do I be the boss while also being a good leader? Any thoughts?
I wonder if it's harder now with it being virtual. Because I
Great
think if I
point.
think about, obviously I never worked as a controller, I never worked for a company like that, but I think about bosses I worked for in tech, the best ones really came out of their office, we went and got a coffee, we'd leave the campus, right? Or go somewhere else to sit down, we have a coffee. Maybe the plan really was on a napkin. Like I remember some of the best development plans I had in my career were 3 sentences on a napkin. We took a photo of it and then we would just pull up that photo for the reviews and see where I'm at. But keeping it less formal is probably the most approachable and probably influences people even more.
I agree.
So I've had two really memorable mentors, bosses, too, in my career. And I suppose I think of them as mentors before I think of them as bosses. And the first was Bruce, who acquired my accounting firm into his CPA firm. And we became friends before we became business partners and became my boss. We met at a conference, and he sort of took me under his wing and taught me what I needed to know in order to be successful, and then was very honest and open with me when we did the transaction. And for that, I'm really grateful. It's really scary when you are building a business and selling a business and merging in a business because there's so many ways people can take advantage of you. And to find somebody that you feel trust with is really key. So I guess just being a manager or a leader who people feel like they can trust is really important. How you do that, I'm not really sure. I try to do it just by being open with people and honest and not hiding the big challenges that I'm having and the questions that I have and the worries that I have, right? I talk honestly about that at Earmark, and we have a lot of challenges. So I try to include as many people as possible in that. So I'm not just sitting in my office dealing with it on my own, which is great for me too, right? Because I get it off my chest. I get the feedback. David knows what I'm talking about.
I have a counseling bill one day I'm going to send you.
Yeah.
Don't worry about it.
So I kind of use my team actually as I don't need to be the strong leader who keeps everything bottled up inside. I need to share that with them, especially in a remote environment. The other great mentor I had was Win White, the CMO at Flowcast when I worked there. And he just was so good at teaching me. He would try to teach me everything he knew when we were working together on how to run marketing at a tech company, which I'd never even worked in a tech company. I'd never worked in marketing before. I was just the product marketer. I was the CPA on the team, and he brought me in, and he taught me so much about demand generation and SEO and the funnel and all this stuff that's actually really analytical. And he was able to kind of teach it to me in a way that an accountant could understand, because in the end, marketing is just numbers, right? It's about taking somebody on your website and turning them into a customer through a funnel with conversion rates. And that all turns out as revenue in the financial statements. It's all connected. And he was really good at showing me that. So maybe the answer is like figuring out where your people are with their knowledge, and then figuring out how to bridge that gap. And for me, I love learning, and yeah, if you can upskill your people, that's the best thing you can do for them.
I think we touched about it in the beginning is I think Gen Z's got a great point about work environment, right? Is I think it comes down to authenticity.
Yeah.
The foosball table fallacy, right? I think
Yeah.
if you could take that element out of the office and create an environment where people want to learn and are encouraged to work hard through, an environment that's dominated by meritocracy and a good culture and all those things that we talk about. But I think the CFO, and it's part of the reason why I love covering this space, is I get to talk to some of the smartest, brightest people in the world on a daily basis. But a lot of them are type A. And a lot of them, finance and accounting people, a lot of them are not socialites.
Yeah.
It takes a lot of time to get that degree and a lot of hours in a coffee shop, sitting behind a computer, not talking to anybody, studying for 4 years, and that shows. And I think once you become a leader, nobody teaches you how to be a leader of people. They teach you how to lead companies and lead operations. And so I think that's a big part of the CFO role that needs guidance is how do I be a better people person? And I agree with both of you. I think it comes down to this idea of creating an authentic workplace. I really do.
Yeah. Authenticity is really the word I think of the last decade. And we have social media to thank for that. It's now not possible. Let me put it this way. In the Mad Men era, you could have two lives. You could have your personal life and your work life, and they could be completely different. And now that's not possible anymore. And I think that creates a lot of challenges in accounting, because there's a lot of people for whom they haven't adapted to that change, right? You put, and especially at the Big Four, right? You put on the suit and the tie, and you become like a different person in the office. And that's not what people want.
And if you think about so much of social media feels fake, it feels manufactured. You would hope, well, at least at work, I'm going to have an authentic experience, but sometimes that's not true either. And I think maybe that's an opportunity, right? If you can provide authentic experiences at your company or your accounting firm, that's huge.
So the lesson is, don't put the foosball table in your office. Create a workspace where people can be themselves.
Exactly right.
I think that's a great way to wrap this episode. Adam, we had you on and we thought it was going to be 20 minutes and we recorded a full episode. This was great.
I know. It's like a Rogan
much.
podcast. This is great.
We have to go 3 hours for that, right? No, I've been listening to Lex Friedman.
Great. I love Lex.
It's really tough though to get through every episode. It's like, I'm like, okay, I'm like 80% there. Got to finish it. That's a lot of, I got to work out more or something where I can listen to.
Walking on the treadmill. That's how I get my podcast.
That's what I need to do.
But
See,
that takes time.
I swim now because it's summertime here, and I haven't invested in the underwater earbud thing. It's just too complicated,
I didn't even know they made those.
Gadgets. This makes no sense.
I didn't even know that was a thing. That's
yeah,
great.
They have these underwater, waterproof, they don't even plug into your ear. They go through the bone. It's like bone. They vibrate on the outside of your head, and the sound goes in that way.
Wow.
Kind of neat. Yeah. Anyway, I haven't bought some yet because I know that if I do, I probably won't use them. Right. I'm trying to have less electronic waste in my life.
Well, when you get them, I'll come back on and we could do a nice product review. How about that?
All right. I'll be in the pool when we do it.
Great.
Awesome.
Really, guys, thank you very, very much. This has been great. And I can't compliment you enough, really, the two of you. Like I said, I'm not a CPA. I learn about this stuff every single day more and more. And you two have been a tremendous resource to me. So thank you for what you do, really.
Thank you, Adam. And thank you for all your great coverage and the stories that you bring to the world, because it makes our lives easier when we cover the news. So
I'll be sure to connect you with Dr. Tim Natty and this former CFO of Enron. I know you brought him up a bunch of times. Loves to do media, Andy Fastow. So I'm sure you can get him on too.
oh, we'd
So
love to have Andy. I
so
just finished the Enron book that
oh,
yeah.
we'll connect and I'll get
Excellent.
you guys connected with him. Okay?
I'm gonna end the recording, Adam. Don't go anywhere.
I won't.